Good afternoon, everyone. As I said, my name is Ben Wright. I'm the Group Business Editor at The Telegraph. And this session is one about financing solutions to drive innovation. What does that mean? I think basically what it means is all of these schemes that you've been discussing so far today, these plans, the technology, the transport, the infrastructure, how do you pay for it? Where's the money come from? One of the answers is banks. And banks come in for a bit of stick in recent years, I'm sure you've noticed. But somebody once gave me a definition of banking, which I think makes a lot of sense. Ultimately, banks are intermediaries. They find people who have money and need to invest it, and they put them together with people who don't have money, but nevertheless need to spend it. When you boil it all down, that's banking in a nutshell. And on stage with me, I've got two managing directors from Citi, Mark Tweedy, directly next to me, and Sanjay Sethi. Welcome, guys. They're experts in doing that, connecting people who have money with those who don't. And I thought we'd start off, if you guys could just give me an example of a government, local authority, municipality, who's come to you with that issue, not enough money for their plans, and figuring out a way to fund it. Perhaps, Mark, I could start with you.
Yeah, great. Well, thank you, and good afternoon, everybody. It's great to be here on stage. Thank you, Ben. I thought I'd start with an example from my company's home city of New York, a place I've lived for a couple of years. And about 5 years ago, the city of New York came to Citi. They had 36 different agencies. They had a problem with the citizenry insofar as enabling payments for the citizens, everything from tax settlements to parking fines to payments for fire department call-outs and sanitation workers. And they had a plethora of legacy systems. So this one's a little less about a big long-term financing. We'll get into that in just a little bit. It's more about an efficiency problem that the city had. And New York City had so many, and in fact, over about 50 of these portals that citizens would log on to and try and make settlements for outstanding amounts to the city. Equally, the city themselves had a disparate set of electronic banking platforms and of payment mechanisms and clearinghouse memberships. And so they rationalized, along with a number of business process outsourcers and with Citibank, their payment architecture to create a single portal for citizens to come in and make their settlements. And that was tremendously efficient for the city.
What were the advantages they got from doing that?
Well, for a start, I mean, in terms of retiring a lot of the technology, the significant operating efficiency savings for the city themselves, and equally for the individuals. If you declutter the payment landscape, it makes it altogether easier. So you lose leakage in the system. You build that back in, and so your collection mechanisms and your days sales outstanding in corporate speak, i.e. your accounts receivable, are greatly reduced. Yeah. So from a cash flow standpoint, it's entirely efficient. And it's clearly for us, it's a flagship location, and it's one I know Boris is following us on afterwards. We're very proud of our association with New York. So to be able to do something for our home city is great. Of course, we added the bikes as well. They're not called Boris bikes over there. They're called Citi bikes. So we're very proud about that.
Yeah, perfect. And obviously, New York's a city that's grown up over time and obviously built up all these layers of systems, legacy systems. Sanjay, I know your experience, you spent a lot of time in Dubai, which has kind of been built almost from scratch in a very short period of time. Do you want to talk about some of the projects you've done?
Sure. Thanks, Ben. And from my side, I was thinking to the question, and it's just not Dubai. We've been working with cities and clients in sort of various cities across the world for quite a bit. First, I just want to point out that a few months ago, we launched a 10-year commitment, $100 billion, for just financing, facilitating, working with projects which are sustainable and also which reduce the impact of climate change. So that was announced a few months ago. So that's going to be important for us. But if you look at our work across the globe right now, and going back to New York, we've also been selected as one of the consortium members for the build-out, the main terminal build-out of LaGuardia. which is a big one coming
Yeah.
up there. If you go to Latin America, of course, we've worked on switching on the lights again for Detroit City. If you go to Latin America, we're working on the Panama Metro, which is the first time they have a consumer a rail system, commuter rail system coming up in Latin America. So that's something we're working on, and that should transport about 30,000 people every day on an upcoming city. If you go across to the Far East, we got examples where we're working with, I know Singapore came up in the panel just before ours, but we've been working with Singapore and Hong Kong, both key governments, city governments, where they're looking at streamlining their entire procurement chain and making that faster. And there are success stories there which can be spoken about. And we mentioned Dubai, yes. So very recently, we were nominated by the city of Dubai to work on. They were looking at automating their entire supply chain finance, and they wanted to. So you know, the important part here is that earlier we were talking about large infrastructure projects, and then you go on to various city governments who are talking about not large infrastructure projects, but they're talking about just the basic interaction they have with the suppliers and citizens, and how exactly do they finance them. So their aim, so the Dubai government's aim was to just make sure that they centralize the entire procurement piece. They work very closely with their SMEs, make sure it's a visible exercise. A lot of the work, the good work that happens among key cities today, typically happens in the background. You know, nobody really realizes the work going on, but they wanted to make it visible and transparent to their suppliers. So they've managed to automate their entire supply chain end to end. Automate it in the sense that, you know, those transactions go faster. The suppliers come up with financing that they wouldn't have access to on their own. The government gets an extension of their financing terms at no cost to themselves. So it's almost like a win-win for everybody, where, especially with government struggling with tax dollars, tax pounds, it's much the same there. I mean, budgets are restricted, and they don't want to do very new things at very short notice, but they want to do it in a calibrated manner. So that's just gone live. And
so often it's sort of the building bridges or building tunnels that get all the headlines, but actually projects like that where you're doing the plumbing, working out, you know, important things like people being paid on time. It's sort of it's kind of crucial.
Yes, absolutely. So I think visibility is also very important, and some of these projects actually bring that through.
Yeah. And Mark, I was wondering if you could give me a sort of example of, we've obviously got people from government, people from the private sector. Can you give me a good example of that collaboration between the public and private sector and where you've seen it working well?
Yeah, I mean, I'm on stage here representing my bank, an American bank. You can tell by the accent I didn't grow up in New York or Detroit, but I want to give a next example is an example of working with the Michigan Public Lighting Authority. The city of Detroit, following the financial crisis, as was widely publicized in the Telegraph and other publications, went through a major crisis. You know, the auto industry, in terms of new vehicle registrations, caused the industry's fortunes, economic fortunes, to plummet. The city itself went into Chapter 9 bankruptcy. And, you know, we've been a long-term partner for the city of Detroit. I'd probably stop before I go on and just say the United States, obviously a very different environment to the United Kingdom in terms of how the city-states, the cities, the municipalities fund themselves and organize themselves. And obviously the capital market's very different in the United States relative to the United Kingdom in terms of the dollar bond market and the sterling market for local authorities here in the UK. But the example I'd give is you had a situation where the city was in fairly profound difficulties, and they had a very decrepit lighting system. And crime was on the rise along with unemployment in the city of Detroit. And they needed to raise funds to swap out all of the traditional lighting with LED lighting across the city. They had to exchange 65,000 light bulbs. And that was a significant cost. That was north of $200 million. It was north of $240 million, actually. So what happened there is, I guess, a twofold exercise. One is Citi came in and purchased $60 million of the bonds. We then, secondly, underwrote $185 million and distributed that into the public markets. And that's, you know, if you think about banks as providers of capital, and I didn't know where you were going with your little analogy at the start. I thought, I know you're a cyclist, so I'm talking about my Boris bike. I might take a joke at your expense about being a mammal and going through the country, Surrey Hills, but I thought I'd better of it. But no, in the city of Detroit, we really wanted to help that city, long-term partner, and we were able to connect investors to the authority there. And, you know, maybe a nice little end to the story, and it's a bit of a derived effect from banking, but not only were they able to illuminate great tracts of the city and make the areas more inhabitable and therefore desirable and increase real estate prices, but they also worked with the police, and they inserted you know, sensors and cameras within the LED streetlight system, which meant that the 911 emergency service system were able to A, see better through the cameras, but B, also through the sensors detect, and it's a problem that's somewhat unique to Michigan and the United States, but ballistics. So they had increased gun crime in the city. The benefits of this whole program were they could locate the exact precise location of a shooter. They could locate whether or not it was from a moving vehicle or whether it was from a stationary individual, and they could dispatch the emergency vehicles faster to the site. So it had a sort of consequential benefit that we certainly didn't see coming, and we can't you know, equate to our work. But I guess it's nice when you get those stories, because sometimes you sit in your offices in Canary Wharf, you do a lot of work on spreadsheets, you do a lot of work in rooms, but actually to hear the effect. And of course, on a financial benefit, the operating efficiency savings were magnificent. They went from an annual budget for the old lighting system, about $15 million a year, to just over $3.2 million a year. So great story for the city, back up, off its knees. Yeah. And that's where investors who have, as Sanjay was saying, you know, a bit more of an ESG, you know, environment, social and governance angle to their activities, as well as a belief and backing of a given city or location, can really help to inject money, much needed.
And do they see the crime rate actually falling there?
Well, I actually, to be honest, I don't know if the crime rate's fallen, but certainly the response rates and the apprehension rates amongst criminals, but the actual response rates and detention rates have increased. I know that much. Statistically, I didn't look into the finer points.
Fair enough. But that's sort of keeping the lights on. I mean, it sounds quite innovative as well, with as you say, with sort of being able to detect the shooters. But essentially, can you give us any other examples of where you've seen the private sector being able to sort of catalyze innovation?
Yeah, sure. I think the way I see it is, you know, when it comes to public-private partnerships, I think there are a lot of good ideas out there, a lot of great work which is happening out there, and there's no doubt about that. But the way I see it is that it gives a whole lot of flexibility for change and to bring new ideas to the table, which is not there. I mean, if you look at the private side, the private sector, we are always incentivized to innovate and do something new. When it comes to government and you know, I believe you know, the worry about how you spend your tax dollars, or the worry about whether you'll be part of the next administration or not, really sort of sometimes keep you back from really sort of innovating too much. But I think with situations like these, it just sort of helps you catalyze change versus constraining it. Yeah. And I'll just sort of give you a few examples. Again, I'll start off with a New York-based one, where the Bloomberg administration, when they wanted to roll out the bike program, this is like a few years ago, there was this worry that it wasn't very popular, and the worry was that they would be spending a whole lot of dollars in rolling out something that might not work. So when they came across and partnered with Citi on this one, it gave them the freedom of choice of trying this out on someone else's sort of purse strings. But luckily this came out very well. And today, if you look at it, in 2 years' time, they've had 20 million trips on that sort of Citi bike model, which has been a success of sorts. And the question is, does it make absolute sort of monetary sense to get that done? for at least for the administration, that's not something they have to sort of worry about.
Yeah.
It's more about the fact that they managed to roll it out in the first place, something which they couldn't do earlier.
Yeah. And as I said in the introduction, you're bringing the two sides together, the investors with the people who are needing to roll out these projects. Can you perhaps give everyone here sort of your perspective on what the investors want, what they want from these projects? Obviously, they want to make money. Mark, you alluded to the fact that they might have environmental governance concerns, but what are they looking for when they're assessing these projects?
Yeah, I mean, there's such a range of projects. I know some of the sessions earlier were on transport, they were on energy, they were on robotics and mobile, whether it's fiber or whether it's 5G, or there's such a range. I know we're on a clock here, so I guess I'd probably just focus in on one area. I guess at Citi we've focused really on some big macro themes for investors.
Yeah.
And Sanjay hit the nail on the head earlier. Energy and the COP21 meeting in Paris and the global effort to keep climate warming to 2 degrees above pre-industrial levels is a huge subject for investors, and they're really, really interested in it. In fact, last week we did a green bond for one of the large utility companies, EDF, north of $1 billion. Investors are, and on that, about 50% of the investors had CSR as part of their new mandate. So you are increasingly seeing that, and I think that aligns.
CSR, in case corporate
social responsibilities. Yeah. Apologies, that's but right. You are seeing increasing awareness. I mean, we hosted an event last week on fossil fuels and on low carbon future, and one of the interesting observations was from investors was that they're now beginning to get certain moratoriums on certain legacy fuels as a percentage. Started off at zero, started off low single digits, is now getting into double digits. So the extent to which cities can be thinking about the energy mix, the financing and funding for these things, it's great. It's not just the cities themselves. I think the companies that are within the cities have an obligation, and I just call out, Unilever is a great example of a company that came out the gate very early on with a sustainability bond for their supply chain. We talked about supply chain for Dubai, and Unilever has supply chain commitments in terms of waste, in terms of greenhouse gas, in terms of water usage, and restricting use around the proceeds of bonds. And I think these are all good themes for investors. Yeah.
And I mean, what do you put the momentum behind corporate, especially the environment responsibility?
Well, there's a lady at Citi called Tina Fordham, and she's our chief political analyst, and she has something called Vox Populi, which is all about the rising voice of the consumer and the sort of dissident youth, and about the changing demographic of societies. And I think society is just getting more engaged, whether it's through social media. We saw it clearly, the best example recently in the Arab Spring. And I think people recognize it, and people are genuinely alert to that. Yeah. And we see Vox Populi as an indicator and as a input into decision making of investment committees.
Yeah. Sanjay, can I bring you in on this as well? I mean, what are you seeing from investors? What are you hearing them ask for?
A variety of things. I think by and large, investors need bankable models, and sometimes they're just not there, especially in. So I just feel, and to add on to what Mark is saying. So while investors obviously have CSR principles that they go for, and they've been investing in a whole lot of green bonds and similar sort of instruments. The structure of capital itself is changing. So today there's a realization that every project that comes up, which is developmental in nature, might not give the returns that they want to get. So we're seeing a convergence of various development banks coming in, who are trying to rope in capital from the commercial banks and from different sources. These could be banks, this could be institutional investors, it could be whoever wants to sort of invest in projects like these, and somehow get a blended model for finance, which includes return and sort of good work by the principles that they want to go for. Yeah. And I think increasingly we are going to be seeing, especially for infrastructure, we're going to be seeing blended finance as the way ahead, especially for all the large-scale projects coming up which need large, long tenors and large amounts and a variety of investors to come in, where not just one bank can do that whole thing.
And this really isn't a plug on behalf of Citi on the research, but it really is. I took a copy of this Energy Darwinism report back home to my elderly neighbour who worked in nuclear power for many years. He's now in his 90s. I think this is an incredible piece of work put together by our research team. It has had 40,000 downloads. Our next most popular piece of research materials had 17,000 hits. But so the point I'm making here is, in terms of interest, that's investors that are taking that, and so the level of interest in fuel efficiency and in clean energy and renewables is certainly increasing at a dramatic rate. So I encourage you to have a look.
So we're projects that focus on those kind of things will attract investors. Yeah. And in terms of, talking about innovation. How do you see it driving economic growth in given cities?
I think I believe that almost all smart cities across the world possibly think alike. I'm not just talking about. I know this is an event about Britain's smart cities. There've been mentions of a few other smart cities, but whichever event I've gone to. The thinking, the background is very similar. So let me probably talk through 5 C's that I think are important for smart cities. I think the first we've heard all day. It's collaboration, but I don't see collaboration as something that it's not about just governments talking to each other. It's governments taking ideas off each other without a problem. I would go in as far as saying that there's no harm in stealing an idea, from a different government or a city in case they've got it right. So just for example, we spoke about the bike program, which was launched a few years ago. This wasn't a New York idea. It was something that's been done in Amsterdam for the last 50 years. We've talked about legislation being passed about cutting down smoking in bars, and about 10 years ago, 500 cities have followed it. And the city which launched it was about 15, 16 years ago. So it's collaboration, getting a good idea, starting to roll on it. So that's the second point, I think, is connectivity. Connectivity is very, very important today. I think every smart city is rolling out broadband services, so that's no big deal. We spoke about not just a department rolling out and connecting itself to a citizen. We spoke about connectivity within departments. That's going to be the next big thing. I think that's the next step to take. And by and large, successful smart cities are completely interconnected across all departments for the citizen. Everything is under one roof. So it's important to get that piece right. The third piece, I think, is capital, and linked onto that is capacity building. Enough said about the infrastructure piece. We've already discussed that. We've spoken about the infrastructure. There's going to be $57 trillion of infrastructure spend that's going to happen in the next 15 years. I guess the city which is the most innovative, which is talking to investors the most, and out there trying to convince them about their model, are the ones that are going to win of the top 100. Clearly that's going to be a big thing. And by the way, I think capital is not just as infrastructure spend. It's also about streamlining your procurement so that you free up capital for other things. The fourth thing, I think, is centralization. I think it's very key. We did discuss it when it comes to interconnecting departments. But today, almost all large cities have shared service centers in place. They've brought in all the services under one roof. That's important because I think it's not just citizens demanding that. It's also about saving costs on building the pipe, getting the technology spend. We're making people who are experts in what they do and putting them under one roof and providing that service. I think there are a whole lot of cost saves that literally go into something like that. Yeah. So centralization is going to be very important, and centralized procurement is really a part of that, which many cities have gotten right, and that's across. I can name 4 large cities across the world who are already doing that, not just Dubai. Singapore and Hong Kong got that right. London has got that
Yeah.
right to a large extent. And finally, it is commitment. I think the fifth C is commitment and having a consistent approach to how we do things. It is, and I know I'm sort of probably preaching to the converted here, but this is not just a one-year story. It's got to be a 3 to 5 year story where everybody's talking the same thing time and again. It could morph a bit. I mean, it could be about the one year could be innovation, the second year could be digitalization, the third one could be something else, but it really goes into the same theme.
Yeah.
So thematically, as long as those 5 things go together, I think a city would have a great story to attract investors in.
Yeah.
And
How difficult is that with election cycles? And you've obviously got, sometimes
I'll leave that to Mark.
To make that long-term commitment.
I'm not sure that's necessarily a question for us. I think it is a challenge. It is a challenge. I think actually I'll answer it differently, because some of the best examples have been in some of the shorter tenor types of financings. And if I think about examples where the public sector and the private sector have really begun to profile similarly, I'm looking at a LED screen in front of me telling me there's 4 minutes and 10 seconds until Boris arrives, maybe. But no, I mean, what that's saying is, what it's actually reminding me of is a supply chain finance program that we put in place for a large technology company. It was a nice story, so I'll be brief, but I think I'll be engaging for the audience. It was before the FIFA World Cup, the Football World Cup. We're not going to talk about the Rugby World Cup after Craig Joubert's decision on Sunday, but it was the 2009 South Africa Football World Cup, and the flat screen television producers were really struggling to meet the demand spike of people in their living rooms watching their teams avidly progressing through the tournament. And one of our clients approached us and said, we're struggling against Apple to source liquid crystalline for the glass for the televisions. Yeah. And we don't have the same buying power and purchase power, and there's a scarcity of supply. How do we meet that? And we put in place this early settlement system, this supply chain financing program, which effectively means if the purchase order is approved, the invoice is approved, and the client, in this case the tech company, is going to stand by that payment, we will release that. That was a great example. Suddenly, suppliers wanted to sell to them rather than to others in order to get the faster payments, in order to get the liquidity, in order to churn their working capital faster. Now, the application to government and to the public sector in the cities is that not long after that program went in, and the program for a number of large UK multinationals, we had a session at 10 Downing Street, and we actually joined forces with government to say, this is something that all FTSE 100 companies should be doing, and this is something we're going to do. This is something that the central government, is going to do. And what we ended up doing is putting in place a program for the National Health Service. Because if you think about it, the creditworthiness of the NHS relative to pharmacies receiving payments for pharmaceutical drugs that have gone out the door, they bought them from GSK, from Pfizer, from Wyeth, from whoever, and they've sat on shelves waiting for somebody to be prescribed that medication by the doctor. They've come in, they've presented the fact that they get free medication. Then they have to wait for government to settle them. That's a long period where they're having to fund that through the banks. And because of Basel III and bank regulation, that's become very expensive. So if you've got a government on this other side standing behind it, and you've got the ability to discount your receivables from the NHS, you're going to take advantage of that. So we found that in the first year of implementing that, 11,000 franchisees of pharmacies discounted their receivables from government, from NHS. And a lot of that is in cities across the UK. I think that's where you see the private sector solutions and the public sector really coming together. And I think that's something we'd like to see more of. We'd like to see extension of that. That's one application. There's got to be other applications. It's our job to try and identify those flows and to work with others to embed those flows.
Yeah.
And just to add on to that,
Yeah.
I think it's you spoke about leadership and how do you sort of manage this across elections sort of thing, but I really won't sort of delve into the elections piece, but more importantly, I think when it comes to driving out change in many of the cities, there in almost all the key cities across the world today, there are single committees that have been given the right mandate to just drive this change through across a certain period of time. So literally, it's a set period of time that they're on. They're obviously multi-party or multi-committee or multi-agency that sit out there, who take a holistic view of whether the change is relevant or not. Especially because I think when it comes to smart cities and the way they operate, what one department might do might result in an advantage of somebody else. So everything that might be done on the transportation side might result in advantages for security, for example. And therefore, just important to be all sitting in the same committee, making sure that there's leadership at the top. Might not just be one single leader, but more of a committee driving that change for a certain period of time.
And in terms of public sector initiatives, I mean, there's been a lot of political rhetoric recently about infrastructure spending. Now Britain is building, and obviously an emphasis on the Northern Powerhouse, championed by Boris's good friend. What are some of the things that need to be considered, Mark, in projects of that size?
Yeah, I think go back to my Detroit example and the US example. I think today we have, gilts, we have central funding. I think a lot still has to be worked out. It's not clear to us, it's not clear to the market, the nature of the tax raising powers, and therefore the autonomy of the municipalities, the regions, for want of a better expression. So as and when we have that clarity, then we can look at the necessity to aggregate, pools of capital requirements, and then effectively take that capital and that funding need and sell it on to the market. And that's what we focus on. What we focus on is distribution. In very simple terms, Citi as a global bank in 100 countries, that's what we focus on. It's identifying investors overseas, bringing it together with issuers here on home shore in the UK as an example. But we can only really do that if we know, who the underlying issuer is.
Yeah.
And today, whether it's through the public works, the loan board, the divestment of authority to the local authorities is critical to understand.
Yeah.
Where the underlying risk is.
Yeah.
And what the size is. And it has to be of a quantum that the market is going to digest and find attractive.
So you need a sort of critical mass. Yeah, for these projects. Okay, I was just wondering if, looking around the room, whether anybody has any questions? Question at the back.
Geoffrey Lean of the Daily Telegraph. Fascinated, Mark, by what you, and indeed Sanjay, by what you were saying about green bonds and the interest in renewable energy and the like, and your own interest. And I hear it from business everywhere I go, but you don't get the same sense from government at the moment. Now, do you agree that business is ahead of government, and if so, why is that?
I happen to think that if you look at the issuance, I gave the examples of Unilever and EDF as an example. I think the Green Investment Bank is a great step forward. I think the recognition in the UK of the necessity to fund projects such as that. I know that there's an interconnector going in through the Channel Tunnel. I think the government is live to the needs in terms of energy and efficiency, and I think if you look at the example I gave of the NHS program, following on the heels of some of the leading technology companies or closer to home, people like Rolls-Royce and Vodafone who have implemented these things. There's no harm in prototyping it, given the sheer size and scale of a government. I mean, certainly the UK, we would always prototype something at a smaller level. And indeed, if you look at the Unilever issuance of 250 million sterling relative to their overall debt requirements, it's a starting point. It allows them to give financing to ice cream freezers in Africa. It allows them to process their waste more efficiently for elements of their confectionery division. It's not going to be the basis at this stage of their entire capital structure. But I think that's okay. I think we're starting on a journey here, but I think the signs are very positive and the signs are healthy. And I think that will only continue. Certainly from this conference we hosted last week, the investors, as I said,
are increasingly focused on fuel efficiency. And COP21, I think COP21 in Paris in December will create a much greater profile. We've seen it already on local shores.
Any other questions around the room? One just over here. I'll come to you, sir.
Hi guys, Mike Elwell from Imtech. Are you in any conversations, or do you believe there may be another model of PFI, a more simpler procured model of PFI coming up in the future, specifically with the asset bases of lots of local authorities becoming much more older and needing replacement? The PFI models were put in place to assist that, but they didn't seem to work originally in most instances. Do you think there'll be another model coming out which you'd be involved in, because I know the banks were heavily involved initially, in enabling that? And as a second question, just to similarly linked, are there any discussions, or have you been involved in any procurement of assets or taking on assets from local authorities where there are billions of pounds worth of assets and then leasing back, but maybe looking at more innovative ways of utilising those assets as well?
Well, I mean, I'll maybe start with the sort of second question first, if I may. You know, in terms of assets, a lot of the rules that banks are now governed by, and certainly as a US bank, we're beholden to different regulatory bodies than others. You know, OCC, the Office of Control of the Currency, and the Durbin Dodd-Frank legislation. There's been a huge amount of regulation around assets. And of course, where I've seen it most pronounced is in the proprietary trading on the commodity side. I cover corporates as well as governments. I think appetite for longevity, long-term asset holds on bank balance sheets doesn't necessarily sit with the regulatory regime we find ourselves in today. So the model, as I say, that is proving through the examples that I'm giving to be very compelling is where the distribution and the defeasance is there. So even on some of our largest short-term working capital financing programs, there's still a huge amount of demand from Japanese banks, from other banks that are largely domestic banks, to come in and take those asset hold positions. And for us, to act in a syndication capacity is a positive thing. In terms of next generation on PFI, again, our focus, and I'm talking purely on a city, has been on the advisory piece. A lot of others have led in that space in the past, and where we focused in is on the capital market side. So again, I would have to pause on that one and defer on the answer to the first question. Sanjay.
I think we had another question here in the front.
Thank you. Rob Shaw from LDA Design. Do you see the sorts of ability to raise finance that you referred to US cities having, raising bonds and so on, being extended to the UK via the sort of devolution agenda? And as a related question, you've talked a lot about what seems to be fairly traditional financing. Do you see that landscape changing with things like crowdsourcing, crowdfunding?
Good question. The second one's particularly close to my heart because I used to run our transaction banking sales team. We've actually done a lot of work with Imperial College here in London on digital money and on the evolution of fintech and how the finance is one of the industries going through a great degree of evolutionary change, not just automotive, not just energy. I do see a case for peer-to-peer lending. I do see increased opportunity to play in that place. I see a lot of non-bank auction houses, intermediaries, software companies coming in, trying to connect lenders with borrowers. So I definitely see a trend towards that. I think depending on scale and growth, that too will have to be regulated because we have to see how that goes. For Citi, certainly here, talking in the UK, our focus is on the corporate and the investment banking. So we're not going to be in the business of taking a lot of risk exposure on these either individuals or on SME type borrowers. But do we see an evolution? Are we investing in that? Are we investing in the blockchain? Are we investing in cyber? Absolutely. And are we doing the research? And that's one thing that we haven't talked about, certainly in this panel, is around talent in cities and about how you can make cities attractive for talent and the criticality of diversity in terms of breaking free of the gene pool and getting the best ideas. Quick response to the second element of your question. Sanjay, I'm doing a lot of talking here. Do you want to do the...
But on the first element, because you're talking about Detroit raising a bond, I mean, part of the issue is that the US has much wider, much deeper capital markets than in Europe, and that's something that's being tackled. The Capital Markets Union in Brussels being launched by Lord Hill. But that's turn it back over to you guys. That'll presumably take some time.
Yeah.
Yes, absolutely. And I think to the point that was made, when it comes to retail or someone trying to raise financing on their own on the back of a great idea, or earlier there were sort of private equity funds that would sort of help, and a whole lot of greenfield sort of venture funds that would probably help, depending on the idea. But I think this is a really disruptive sort of process which is on today, and I think we across all cities, sort of, there are various players coming in. Mark, you said the right thing. I think it's just not banks who are playing in this field. It's non-bank financial institutions, technology companies. There are a whole lot of players coming in just to intermediate in that space, and it is going to be certainly disruptive and probably great for accessing avenues of capital which are not there. Of course, it needs to be regulated. I think it'll be important that the sourcing of the funds come from the right sources. Come from the right place. But yeah, that's my take.
I think it's a wait and see on the future of the UK. In terms of our outlook, we're spending a lot of our time focused more about the question about the EU reform and referendum at the present moment. But I think that's a wait and see. And as and when it does clarify, then clearly we've got something to work with in terms of how we take that back with investors.
Yeah. Another question over here. Two over here.
Thanks. Graham Copley from Urban DNA. I was intrigued when I was crossing DC a couple of weeks ago in terms of a setup they have in the States where they've aggregated demand and created a bond to help particularly the small and mid-sized cities that are under capacity and are higher risk to investors like yourselves, to help them actually put infrastructures in place. It struck me as a very sensible model, which I, not being a finance expert, don't see in the UK. Is that something that you've thought about, looked at, think it's a good idea?
Yeah, no, I think it comes back to the central funding point, the fact that it's Treasury and B&V issuing the bonds and then centrally funding and distributing. I think it's an absolutely sensible model. Aggregation of different risks and capital requirements and tranching of debt is exactly what the market wants, and that's what people pay for. In the last couple of years, because of the growth. In fact, the first half of this year, so it's not a public sector example, it's a corporate example, but the US dollar bond market exploded for UK issuers. And then so much demand was soaked up by the same investors that a lot of UK companies started switching into the private market. And that's when it started putting pressure from a currency standpoint, and this may be getting a bit too detailed, but embedded cross-currency swaps so that you insulate yourself from all of the hedge accounting, but you tap the investor base, but you diversify the base. And having different sources and having different aggregation points makes it altogether more attractive.
I think we had another question over here as well.
Steve Corkin from Redstone Smart Buildings. You touched earlier on the energy aspect, and it certainly is, from our standpoint, one of the key drivers when we speak to developers and building owners. And I just wanted to touch on what your thoughts were, and it might be something to be answered by a government official if they're here, or maybe even Boris, but it's to do with the ESOS, the Energy Savings Opportunity Scheme. So every building in this country by the end of the year has to be audited and checked as to what level of energy and what pollutants are coming out of that building. If they are not audited by the end of the year, there's a fine of £50,000. Now, given the fact that we've got till 2018, I think it is, to get the buildings within a particular level of energy output and input, that doesn't leave a long time. And apparently, with just less than £200 billion worth of real estate in this country, used by commercial offices, etc., we've only managed to audit less than half. So inevitably, there's going to be a heck of a lot of fines being laid out into the market. My question is, I wonder if this is something of a financial opportunity for government to either allow local authority, or whether the money's going into central, if they pay their fines, to be part of a booster for smartening up those buildings. Because, 70% apparently of urban pollutant is coming from buildings, from the HVAC. Does that make sense?
It does. I don't know if I'm the right person to answer your question, principally because I had to rely on you explaining what ESOS was. But no, I mean, I think it does make sense, what you've just said. I mean, look, I mean, a couple of quick reactions to that. The first is when we had our session last week, I keep going back to this, just fresh in mind, there was a representative from the Greater London Authority at that, and he was talking about building efficiency. And one of the comments he made was, the individual or the company that invents a insulation layer, energy efficient wallpaper that can shrink wrap buildings on the interior, the heritage buildings in our great Victorian and older cities, is going to make a lot of money because of this. Because what we can't do is put cladding on the outside of buildings. We've got to think obviously about the new buildings we're building, but retrofitting the old buildings. And I think that was born out of a discussion on investors and what they're prepared to put into carbon capture and storage investments and green bonds. And so people are thinking about this from within their areas of specialisms in great ways. And, as an example, and again, it's a little bit abstract, but, when we have the congestion charge in London and we measure, transports in London. Now, I think, I'm no specialist on transport, but, we're predicting driverless cars coming in from 2020 onwards. But what we've seen in the last 5 years from a research standpoint is e-commerce has dramatically increased the number of light goods vehicles in London. So suddenly the roads are congested with Amazon, eBay parcels. Now, is the future drones? I don't know. I mean, I don't know what the future holds, but I guess to answer your question from the standpoint of sources of new revenue for authorities, the one example we haven't, talked about is Warsaw. In the city of Warsaw, we actually helped the government there put in place a standardized means for court payments. So if you were appearing at court, either if you're a defendant or you're bringing a case to the court, you have to make a payment. And that was historically done via paper instrument, or it might have been done pre or post, but there was always a delay and there was always a huge amount of cancelled court cases because prompt payment hadn't been received. And it was a bit like Tesco, you don't leave the store with your groceries until you've actually paid for the bag. Paid your 5p as well. But, in that case, we were able to put in place, because the city had an issue with micro-payment settlement at the court, a front end and an API, an application protocol that says, look, we're going to take that and we're going to take receipt from a variety of mechanisms. And it's that sort of efficiency agenda that certain banks, would like to be part of providing solutions for. So long-winded way to kind of respond to your question, largely because I had to sidestep the thrust of it, but, hopefully it's helpful.
Yeah. Broadly, I think you could say if there's a problem, and it involves a lot of money, there's probably a smart brain in a bank somewhere trying to think up a way of
we don't have
cashing in those cash
monopoly
flows.
On that,
Yeah,
or
exactly.
in Imperial or wherever. Yeah.
Any other questions around the room? I haven't direct my gaze over this side.
One over here, I think.
Alistair.
Yes, Alistair Heath. Just a quick question. What I'm really interested in is if you were to create some sort of international league table of smart cities or smart regions and so on, given your experience in Dubai and across the EMEA and all that sort of stuff, where does London or other UK cities that are pioneering this sort of stuff, we've seen Milton Keynes and so on, where would they kind of go in this global league table?
Sanjay, do you want to say that one?
Yeah, great question. There's a difference probably between the background of and I'll just stick to London for a moment, the background of growth that London's having to make and what's there in some other cities. A lot of other cities are starting from scratch. So they don't have the problem of existing infrastructure and existing the level that the city is built out already and having to go beyond that. many of the cities around the world are actually taking a quantum leap and just going to the final stage of development, and therefore they roll out something which is best in class to start off with. So that leads to a whole different layer of rankings as a result. But to answer your question, I think the fact that London's the city of London has developed to the extent that it has, the new systems, the new projects that we're working with and are visible to us, from a financial point of view, I think London is pretty much on top out there. When it comes to speed of probably delivering some of the projects, I think some of the other cities probably would steal a march on that piece, where they're able to deliver some of the projects faster because I guess they're smaller. They also have one management at the back of all that change, and consequently they're able to get beyond all the discussions that go into a build out pretty quickly. So from a speed perspective, I think some of the other cities would probably rank better. But as I was talking about this just in the break, I think a lot of the smart cities really look at the City of London or some of the other cities in the UK for understanding the growth model.
I think I'd also say that other cities have kind of grown differently as well. I mean, I did an awful lot of work in Africa with the telecom industry around alternative payments, and if you look at cities like Mombasa and Nairobi, the much publicized case of Safaricom, M-Pesa and mobile payment, you could clearly see there they've done a quantum leap in their communication and payment protocol architecture, and isn't that more impressive than legacy urbane banking? And you could make that case. Other cities like New York, again, which have suffered force majeure, where they had hurricanes come through and damage buildings so badly that it made no sense to retrofit those buildings with their existing copper, and they needed to move to 4G, 5G fiber, and therefore they dramatically overwhelmed, and companies like Verizon and AT&T come in and work with mayors like Bloomberg and others to make much more time-specific investments. Thankfully, we haven't had the same type of challenge, and we don't come from the same base. So it's hard to say where London would sit, as Sanjay said. I think you apply the right disclaimers. But I think there are some good examples of emerging market cities as well for other reasons. I know people like Google have done a huge amount of work to Wi-Fi offload throughout cities, and I keep coming back to telecom. We're in the middle of a CMA review right now for BT and EE and the whole OpenReach question. But I think the point is, super fast, mega fast broadband does matter. It does matter for efficiency and productivity, and it certainly matters for economic growth, and that's ultimately what cities are there for, along with communities and social engagement.
One other question I've got, your city is obviously a global bank. We're talking about sort of quite local projects. We're talking about Detroit, we're talking about London and Northern Powerhouse. To what extent is there global appetite to invest in these things? I mean, were the Detroit projects, were they invested by mainly US investors, or did they come from around the world?
Yeah, no, I mean, the depth of the depth of the US market allows that to be met domestically. Yeah. But I think, is there appetite to invest? There absolutely is. I think the negative interest rate environment right now in Euroland, in the Nordics, in Switzerland as examples, and the depressed interest rates in other aspects of the world, and the credit worthiness and profile in terms of low inflation or low inflation in certain economies forces other lenders and investors to invest elsewhere. Yeah. I think the world of finance is very global. It doesn't matter that you have to be next door. It's not proximity driven. And
Sanjay, was that your experience for the projects in Dubai? Was that funded locally, UAE, or did the money come from?
Probably a mix of both. Even the projects here, by and large, they get a lot of institutional investor interest. I think we've got several wealth funds across the world who are still investing pretty actively. Yeah. Not just sort of pulling out funds as sometimes that you read in the newspapers. But I think there's certainly a lot of interest in projects here, as long as there's enough capability for distribution across several investors the level of return is pretty close to market linked. And it's also, we're also seeing, as I mentioned, the new type of investors who are coming in because they're backed by a development bank who's at the back of this, coordinating the whole effort. So that if there's infrastructure spend to be done, and there's an investor coming in, you just want to make sure that it's coordinated by a development bank who's well respected and in the market, who can come in with a midway model for financing.
Yeah.
So it doesn't have to really have alpha returns every time.
Okay. Any more questions around the room? One in the back.
From Arcadis. My question is just if you have a view on the future of asset ownership at a city level. And the reason why I ask that's perhaps linked to the PFI question, where if you look at utilities, for example, in the UK, there's been a lot of investment from sovereign wealth funds and private equity houses. But I'm just wondering whether you could see that applying at a more local level for multi-asset classes in a city, perhaps?
I think it has to come back to the same answer I gave earlier. I think, we're not spending a whole lot of time speculating on what the future may hold, depending on the dynamic shift in the environment. I think it's more dealing with the current immediate challenges of these municipal governments and of federal and state governments. I think there's, I guess the message that we want to give is that there's the man. There's the man.
Have you finished, Mark?
I think I have. I want to ask Boris Johnson his view on the refereeing decision on Sunday. As such an avid rugby man, I'd be delighted and interested to hear.
Well, perhaps when he comes up here, he can give it to us. But for the time being, if I could thank Mark and Sanjay for being up here a little bit longer than we thought they would be.
4 minutes 11 seconds.
And answering a lot of questions. So thank you very much, guys.
Thank you.